Welcome to Money Matters TV. I'm your host, Jim DeLorenzo, the principal of Jim DeLorenzo Public Relations, professional storyteller, I like to say. And my co-host today is Kelly Stewart, the founder of The Positive Business. Nice to see you again, Kelly.
Nice to see you again, too,
It's
Jim.
our second time together here.
Awesome.
So when we were talking before the show today,
Yes.
we were talking about having a positive attitude in your business. And I used the example of a client of mine who reached out to me with a crisis
Right.
and wanting an immediate solution to a crisis that may or may not be a real crisis other than in her mind at that moment.
Right.
And what we were talking about is how you can take that moment of crisis and use it to create a positive outcome.
Absolutely. You can flip it, right? And I think part of the problem, and your client certainly would not be alone in this area, is that we have kind of been conditioned, right, to accept the status quo, and then when something comes up that doesn't feel good, it feels like a crisis, right? That's what we address, that's what we pour our energy into, and that's when we unleash our creativity, right, our problem-solving skills, whatever those things are. And to take a more positive approach into your business would say, let's just every day build on our strengths.
Sure.
Let's every day use the best of what we have that make us unique in the marketplace, that help us get results in the marketplace, and let's apply that to finding opportunities, right, to building the proverbial better mousetrap.
And I think one of the things that I found interesting in our conversation, the idea of, I've heard it before, where you say, instead of saying but, if, you say and also.
Absolutely.
And one of the things that you discussed is, what if you could? What if you could do this? What if you could do that? Or what's like the blue sky vision that you have for your business? Is that something that helps redefine how you relate to your business?
It really does in a lot of ways, and I think what you're describing in there is what we hear a lot from as we're natural problem solvers, people, right? And so what you hear a lot of if you are consulting with someone is, I can't do this, right? I'm having a hard time. We as service providers have been conditioned to identify a pain point, provide a solution.
Right.
This is good, and in many times it's necessary. But it leaves it paints only part of the picture, right? And it leaves other opportunities on there, which is to say, well, when things are going well, what does this look like? And I think that's the greater opportunity for business leaders in general, is to just take this, how do we make it better?
Right.
How do we work? Right.
And there's another thing that we talked about is the fact that, okay, you have positive things going on. Things are going well. Continue to build on that momentum so that that little crisis moment is much easier to overcome because you've had so many other positive things going on along the way.
Right. And it does. It makes that a lot easier to handle because you're in a regular habit then of building on your strengths, of looking for opportunities, of saying yes. And there are some very real realities in marketplaces that seem insurmountable at the time, but necessity is the mother of invention. So that's where it starts to come from. And if you reframe it as, well, and I think we talked about this too, if you look at a threat as a business owner, but you look at it so closely that you're like pulling it apart to say, hey, is there an opportunity in there for me, in for our company, right? Then you're really taking that threat kind of face to face. You're learning to surf in the tidal wave, right? As opposed to just being overwhelmed by the tidal wave. And the what if you could kind of approach really starts to kick in there, because when you're looking at something that feels like a challenge or it's a change, disruptive technology, whatever that's going to be, then instead of saying, well, we just can't do it, we can't innovate it, because this company down the street, they've got it all over. Well, what if you could? What would that look like? And I think that starts to open up that channel that gets closed off when in crisis mode, it's just about survival, right? Basic human physiology. The brain gets activated. We're going into fear, fight, or flight, or freeze, and those are normal things. And again, those things have to happen. It's what stops us from, getting hit by a car. We have that fear of, oh, I'm not going to step in the road until I check the lights. But that shouldn't be the norm in business, I guess would be my point.
Very interesting way to put it. Yeah. But I want to get to, we have a viewer question, and this is right up your alley, Kelly.
Okay.
And it's a question from David Lotz of Philadelphia.
Okay.
And he asks, what are some advantages of a positive business? Now, it's kind of a broad category,
Right.
but you have an opinion on this.
I do, and it's a great question. I appreciate the fact that David asked this, because the advantage to being a positive business, there is one advantage, but it applies to two different situations. So if you're a socially responsible business in terms of a social mission as part of your business model, and we see this in the companies where you buy one of their product and they donate a product to maybe an underserved population, that's a company that has been started to address a specific social need, which is a little bit different from a company that's just been maybe in business 25, 30 years, but they're becoming more purpose-driven. They're becoming more socially conscious in as much as how they give back is a little bit more strategic than it's been in the past. And they're becoming more environmentally aware. So they are doing things within their building that are environmentally friendly. They're thinking a little bit more broadly about the waste that they create, even in a service industry. We know we can waste a lot of paper, with presentations and things. But in a manufacturing industry, they're really starting to look at those. You see like eco-fuel, eco-friendly trucks for some of the oil companies even, or anybody that relies on that as a distribution model. So in either case, whether you are a socially driven business or you're a business that has this level of awareness, you're doing these positive things that help you to earn your stakeholders' trust. Because typically, when a company is doing good things, they are, and I'm sure you've seen this, much more comfortable being transparent about what they do.
Right. They'd like to talk about what they're doing. And the employees, the staff, the team members are also happy because they feel like they're part of a greater good.
Exactly. So you have advocates out there who are really talking up your company for you. And the great thing about it is it's all real. And it's all very specific because, again, the company is comfortable being transparent and it's very authentic. And I think that's single-handedly earning that kind of trust through transparency is the primary advantage in the context of David's question for what's an advantage of being a positive business.
Sure. Well, there's a lot to think about there. But yes, it's a positive aspect of change and evolution.
Absolutely.
Well, if you have other questions, here's how to send in your questions to Money Matters.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, M-O-N-E-Y, -matters, M-A-T-T-E-R-S, TV.com.
Welcome back to Money Matters. Our guest today is Mark Condello. He's the president of Cornell Capital Advisors. Mark, it's a pleasure to have you on the show today.
Thank you. Thank you for having me. Appreciate it.
Now, we were talking a little bit before the show, and I'm interested in what you do, what Cornell Capital Advisors does, and who you work with.
Cornell first of all, I'm an ex-banker. I've been a commercial banker in the Philly market for over 30 years.
Okay.
And I've been out on my own probably 20-some of those years now. I left the banking business years ago before the last two meltdowns ago. And what I do is basically help clients arrange commercial financing for their businesses, commercial real estate projects, investment properties, and I also have a residential license helping people refinance or buy residential homes and vacation properties, that thing as well. But mostly it's commercial because that's what I'm trained. I'm a credit-trained banker, but pretty much in the Mid-Atlantic region. So, and that's what we do. We do some consulting for small community banks, outsource credit underwriting and risk ratings and that sort of thing on a bank by basis as they need my help.
Now, for a small business owner or somebody who's starting a business or someone that has a business that needs additional capital, their resources are kind of limited these days, aren't they, because of all the situations with the bank?
Yeah, you're absolutely right. I mean, the problem, and I think we talked about it before the program, is I've been in this business long enough, and in the Philly region as well as nationwide, a lot of small, medium-sized businesses, and when I consider small business, medium-sized companies, companies under 20 million in sales, they used to deal with a lot of the community banks that were around. And the last couple of years, because of the Dodd-Frank legislation, where unless you have a bank that's $1 billion in assets, you're not profitable enough. It doesn't make sense. You have to have the amount of compliance and regulatory oversight. You need to hire people that just take care of that, and the small community banks don't have the budget for that. Thus, the reason a lot of them had been absorbed by big banks. But to answer your question, the problem is the universe has shrunk a great deal, and a lot of small business people contact me because they're frustrated where to go. Because the people that they knew in Bucks County or Montgomery County, the community banks, they're long gone, and now you're stuck with a lot of the bigger institutions, which I won't mention names, but they want your business, but they don't want your business.
Sure.
And it's a challenge.
They just want to have you on the list of of clients, but they don't necessarily have the interest in you and get to know you kind of thing, where they're agreeable to your needs and know anticipate what you're looking for.
Well, as I said earlier to you, that the problem that we have is bigger banks, and I've been told this by chairmen of some of the larger institutions here in Philly, that the regulators are telling them if you do a loan under $2 million, it's not profitable enough. You don't want to do that. And that's the backbone of small business people in this country. The average loan may be $500,000 to $1.5 million. If they can't get a bank to lend that money because they don't perceive they're getting enough, they're not going to bother. And that's why the little banks, that was their bread and butter kind of loans, and now them being gone, there's a void in the market, and I think there's going to continue to be a void in the market for this kind of thing.
You mentioned an interesting point. I had a conversation earlier today with a gentleman who has started a business in the last 6 months. And he has gone out to venture capital firms and presented his business plan, and they tell him he's too small. He's only asking for $100,000, or he's asking for $150,000. No, we're not going to take a chance on you. Come back to us when you have that. And that seems to be kind of another gap in the market, is people who want to start a business, start it responsibly, but aren't going to go after a multi-million-dollar loan or investment.
Well, businesses in that size, somebody like you're just mentioning, he's a perfect candidate with the Small Business Administration. And a lot of banks here in Philadelphia have a Small Business Administration lending group, and they're preferred lenders. And what that means is they can underwrite on behalf of the SBA, which is closed now because our government can't seem to get their act together, but they can underwrite and get approval with waiting until the government opens to issue a number for that loan. But that's how a lot of startup businesses, because bankers normally don't want to lend to a startup company. You have to have at least 3 solid years of track record to lend to. But something like that, the SBA is the best way you're going to have a shot at getting a loan in that kind of size. But there's a lot of paperwork and a lot of items that you're going to need to produce to get the bank to give you that kind of loan.
It's an interesting conundrum.
Yeah, it really is. It's a challenge.
So what happens when if these banking decisions, these lending decisions are being made in areas that are outside of Philadelphia, right? Like, how does that, when you think about community, right? You wear my hat of a responsible, socially responsible business. Certainly, different communities throughout the country operate differently. They have different vibe, different needs, different populations. How does that factor into the overall health of the community then? If these corporate lending decisions, no-go decisions are being made about what types of businesses are going to be in the Philadelphia area, how does it impact that?
It's a big impact, because the benefit of the small, but when I would have a client that's looking for a loan and I would bring the president of a small community bank out, he's the head of the loan committee. He's a decision maker. Now I bring somebody out from a big Wall Street bank. They're going to come out, but it's 10 layers from the committee process, which a lot of them is approval. They can approve it locally, but some, depending on the size of the deal, they have to go out of town wherever their bank is headquartered. It is a challenge at times, because they may not know the area as well as the local banker does, and they have to get the approval from somebody that doesn't live and thrive in this area. So that's the problem with the big banks, in my opinion, and why the smaller banks were really a valuable part of the community. There's still a good number of them here, which I deal with on a regular basis, but they're all looking for the writing on the wall that at some time when they get the right price, they're going to sell the bank, because they have to provide for their shareholder value. But it's a shame that we're going to lose them, because there's no new ones being formed, and the regulators don't want any new community banks being formed. It's too much to administer.
Okay.
Okay, thank you. That just answered a question.
I was going to say, so, and when you see commercials or hear advertisements for a thing like Cabbage or some of these other online loan operations, What are the hazards that you deal with there?
Well, number one, unless I'm part Italian, that is like loan sharking in my mind, because you're paying.
You have a vowel at the end of your name.
Well,
Yeah,
exactly.
yeah.
So it is like you're paying in the 20% range. They're debiting your checking account every day for a loan payment. It's very expensive money.
Wow.
Now they're lending primarily. A lot of those groups are lending to people that bankers normally don't like to lend to: the contractors, the restaurateurs, high failure rate, turnover business. But a small restaurateur that needs to buy new kitchen equipment, he can't afford to wait 10 weeks for a bank to get back to him. He's going to pay. Look, I'll pay it. I have to do it. I have no choice.
Right.
It's not a long-term goal. I mean, some of those firms are doing very well.
Yes.
You guys, you would imagine with the kind of pricing that they're getting, but it's not, a sensible solution for a person that wants to stay in business long-term.
So what are some of the clients and customers that you're working with? What are some of the issues that they're facing right now, and how are you responding to them? How are you helping them out?
Well, as I say, the biggest challenge is just the variety of where they can get capital. Most of the people that I deal with are bank quality people that have been around for maybe 2 or 3 generational family businesses.
Okay.
That are into the 4th generation now, and some have great relationships with banks that are still with us. But their bank was bought and rebought, and they don't know who their account officer is. It's a revolving door. Every time a new account officer comes up, they have to re-educate them about their business.
Right.
And it's not an easy process. So they want me to come in, like, who can we deal with that maybe is a little smaller? That I'm dealing with the senior management. They know me, so if one lender leaves, I'm the president of the bank, the vice chairman knows me. There's a little bit more of a touch there that people can rely on.
Like a continuity.
Yeah,
in the
there's something
relationship,
there,
right.
and you're never going to get that with the big banks. They just roll over people so much, and like I said, there's no loyalty in the banking industry anymore. I mean, people move on because they're frustrated internally. A lot of them, my friends say, "Oh, I'm just waiting to retire because it's just there's no enjoyment in this anymore." So, unfortunately,
Is there any hope for the future on that?
Well, I think, I think there's got to be innovation. I think there's going to be a way. There's a lot of other Wall Street conduit type lenders on the real estate side that are out there that are, providing commercial real estate financing. They're very in the box kind of lenders. It has to fit perfectly because it's Wall Street money and it has to underwrite properly. But I think somebody's going to wake up and figure that we can lend money to small business people, create a fund model, a mutual fund model, lend money, get a decent return, and because most of these community banks, everything they lend against, there's sticks and bricks backing it. You're going to pledge your house, you're going to pledge your vacation home, your commercial property. They're never going to do something on an unsecured basis, so you've got collateral backing it, where a lot of these other lenders we talked about, they're lending on taking money out of your checking account, but you've got furniture and fixtures which are worth nothing in a liquidation mode. At least you have a building if you're doing some more mainstream kind of financing.
What are some of the alternative commercial?
Well, I think we touched on the cabbages,
Right.
as the people like that, the On Deck, and some of these other groups. But there's also been a big push in the credit unions. We do
Okay,
a
I
lot of
was gonna
stuff with
ask
the
you
credit
about that,
unions.
yeah.
They're very aggressive in the commercial lending world now. But years ago, they weren't doing it. So we deal with quite a few of them, and some are very good, and they're very aggressive on their pricing and what they're willing to do. But they're underwriting. They have a lot of ex-bankers now working there, so they understand, and they've really built a good process. But that's somewhere else that people can go if they can't get an answer out of their commercial bank. So that's another source.
And how does that differ from the old community banks that faded away?
Well, I like to think that they're more like that. They
Okay.
seem to be a little bit, because they're all owned by their members, so there's more of a community nature to it.
Sure.
So I think it's better in that respect. But some of these credit unions are pretty large. They're pretty large institutions. So you're dealing with some of that, normal banking type of, process. But for the most part, I think they're pretty good. I mean, the other options you have, there's a lot of private money out there that we tap into. Unfortunately, most of the times we tap into that money because people have had a problem. They've had a bankruptcy, they've had a divorce, they've had health issues, they're behind, they have IRS liens, but they have a commercial building that has a lot of equity in it that we got to go in there and clean them up, get them a loan, pay everybody off, get them healthy, then we take them back to the mainstream lending world. So there's a lot of, but that's expensive money, and you don't want to do that until they're really only a last resort.
Very interesting. And
Yeah.
so that's private individuals? or
Yeah,
private
well, we have in the Philly area. We have quite a few of these guys that have their own capital and they want to deploy it and they want to make a decent double-digit return on their money for a year or two until they get these people back and healthy, and then we bring them back to the mainstream banking world.
Okay.
So when we look at the future of all this kind of landscape, a thought that came to my mind as you were talking earlier, for these smaller community banks, what opportunity could there be? The model that came to my mind was the cooperative, right? And we see that with food cooperatives and things like that. But that's also a business model that's spilling into many other industries.
Right.
Is that something that would be a potential opportunity for the smaller community banks to kind of form a cooperative alliance so that they become that strength in numbers?
Well, they had that. Basically, what they already do is, a little bank has a legal lending limit, and then once they go over that, they can participate with another bank on a loan. So I've always had that relationship, but unfortunately, I put a lot of participations together in my career. And unfortunately, I've seen one bank, once they participate, one bank's trying to steal the other bank's deposit relationship. And so they're a client, but then they're bringing another bank in to help, and it doesn't always go as smooth as you would like it to. So it's not always the best idea.
Right.
So I don't think the cooperative thing on a pure sense would make any sense for any of those institutions.
So
Understood.
maybe there needs to be some more guidelines there, or an agreement going in.
Yeah.
Or maybe they'll see that larger handwriting on the wall now and look at
maybe
it differently.
Hey, look, let's try to find a way to work together and play nice.
Exactly.
So what are some of the needs a client should bring to you if they're looking to get a commercial loan? What type of information would they bring to you?
Well, you mentioned that we waste a lot of paper, and we certainly do. And it is a very rigorous and intense process, even for the simplest of loans. I mean, sometimes I say underwriting a $500,000 loan is equally as difficult as doing a $5 million loan. Wow. It's all about the paperwork. And if you're an existing business, they want 3 years of your tax returns, personal, business, personal financial statement. They want to see, your securities accounts. They want to have your copy of your license. They want to see what the overall trends of your business are. Maybe some projections of where you're going to be. If you own a piece of property that you want to refinance, if you have an old appraisal on that building when it was a couple of years ago, so they get some particular information about that property per se, until they order an updated report. So as much information as you can put together in a professional manner and sort of help them, give them a one-page summary as to what you're looking to borrow, what the sources and uses of the funds are going to be used for. Bankers are detailed. They want to see it. If you can show them everything in a logical manner and give them all that supporting financial information, your chances of getting approval is a lot faster, because unfortunately people piecemeal information out there, and like I say, 8 weeks later they're still coming back looking for more information.
Sure.
Right.
Now, do you help your clients?
That's what I do.
Yeah.
I mean, we basically get all the information. We underwrite it as an underwriter. We underwrite it, put a complete package together for the banks that we take it to. So when they look at my package, they know within 10 minutes when they read it, if they read it, but a lot of them don't read it, yes, this is a deal we should be able to do, and all the supporting financial information are along with it.
Well, that's great. That's a great way to do
Very
it.
valuable.
Yeah.
Helpful
And
service.
anymore, it really
Right.
is it's a real need, because people, like I say, they just don't have. You run your business, you understand what you do. I don't want to have 5 bankers out there. I don't know how they think. I don't have time.
Right.
You go out and let's narrow it down to 1 or 2 who's going to be my best source to help me finance it. And that's what Cornell really does. That's where we make our money.
Taking that into consideration, what are some of your long-term views for the commercial lending landscape in the Philadelphia market, in the suburban Philadelphia market?
Well, Philly's a good market right now, and I mean, I think we do a lot of real estate stuff, loans, construction loans here in the Philly, and I worry a little bit that Philly's getting a little overheated with a lot of the multifamily buildings and with the tax abatement situation, whether they curtail that or not. But I think in general, Philly's a strong market, and it will continue to be a strong market. Again, my concern is that the availability of capital, loans, to these borrowers is going to continue to be difficult for the smaller end of the spectrum.
Sure.
The larger guys that, I always say the guys that don't need the money, they got banks tripping all over them. But the people that really need it and are trying to develop a property or refinance a property, it can be a challenge. And I think it's going to continue. I don't see really any positive change into it in the near future, unfortunately.
Okay.
I may let you off the hook on that. I'm not sure yet, so because I've got one more question.
Sure.
You mentioned, multifamily units, right? Like as part of the housing market here. Could you potentially see multi-tenant businesses so that they're coming up to that threshold, that loan threshold that the big bank wants? You get several businesses that say, we want to take over this property and we'll do this together, so that the loan is a bigger loan.
Sure.
Would that be something
It's
that they
possible.
could do?
I mean,
so you could have like a community with, let's say, the barber shop, the IPA, the food, the bookstore, and they all kind of form some limited liability corporation and they go for the loan that way?
It's possible. The problem you got to remember, though, especially it's like a shopping center situation. You have a shopping center that's fully occupied. That's
Sure.
great.
Right.
But the
But when
problem
one
with
goes-
bankers are the leases that are in there, and the same thing with your center, are only as good as the financial health of each one of those
Right.
tenants. You could have it fully occupied, but if 5 of those tenants are ready to go under, that and you lose all that cash flow in that
Sure.
building, then it can't service the debt. So it's yes, it's possible, but they're going to micro and look at every one of those people that's involved to the nth degree that they all collectively could, basically service the debt, and that's not always an easy scenario.
Understood.
I remember back to the late 90s with the tech incubators where people would do a real estate
Yeah,
play where
right.
they have office space
Right.
and they bring them all together and then they do the lending in-house amongst them. But I don't know if that model would work in retail, say, or
Yeah.
commercial.
I don't know. I don't
Yeah.
know. I don't know. I just, no, we just see a lot of multifamily stuff right now because of, the millennials. So they don't really want to own a house. The old days of owning a home, it's not what they really want to do. That's why you're seeing all these gigantic developments being put up for multifamily. But we'll see how many of those they can fill over
Right.
time.
Right. Understood.
So thank you for telling us all that today, Mark. I appreciate it. And I
Thank
think we really enjoyed having you on the show.
Absolutely.
And I wanted to ask you one last question. I'm fascinated by how people start their businesses. So you were in commercial banking. You were in the industry. You decided to start your own business. What was the tipping point? What was the point at which you said, I've got to start my own business?
Well, when I was with, and I won't mention the name of the bank I was with, my boss came into my office and he gave me a list of about 20 commercial clients that were mine that I was managing, and he asked me that we're going to kick these people out of the bank, tell them we're calling their credit lines, and these are people that were in the bank for many years, were
Right.
profitable, but the bank was going through a merger and they didn't like their industry or these ridiculous reasons that they came up with. And I told him, I said, this job stinks. I said, I grew up in a family business. This is not what I'm used to. Well, I want to find a way to help people, especially people that have never been late with us. They
Right.
always pay their payments. So that was the sort of the last piece for me. And then they let us all go, and I went out and started my own firm and never went back.
Did you have any of those 20 people come in as your first client?
I did. I was I couldn't solicit any of them, though, unfortunately, no. But some of them did find their way back to me over the years, and I'm still banking with some of them right now. That
Well, that's
just knew me
wonderful.
from back
That's
in the
great.
day.
Yeah.
That's a great attitude, too.
Yeah,
Like,
yeah.
I'm going to serve these people.
Yeah,
They've
yeah.
served us.
Absolutely.
That's wonderful. Well, thank you again, Mark. I
Thank you for
appreciate it.
having me. Appreciate it.
Next week on Money Matters, our guest will be Lisa Smith, the president of J.A. Moody. So thank you for joining us today on Money Matters, and we'll see you next time.